Good morning. It is June the 26th, 2017. Time to kick off another trading day. We'll start with our customary disclaimer. Hypothetical or simulated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs in general are also subject to the fact that they're designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profit and losses similar to those shown. Well, it is Monday morning, and the Asian stock markets were up before the news hit that Italy, to the tune of $17 billion euro, was bailing out two more banks. These banks have been on the block for a while. Once again, the taxpayer picks up the risk of modern day banking. And what it leads to, and we have the same thing in the United States, is that if you're designated too big to fail, the people that run these banks know that they've got a put, that somebody's going to back them so they can make investments, loans, etc., that they would not normally make if they were risking their money. So they get to make the extra fees, the extra compensation that comes from going into higher risk loans, etc., whatever it might be. And then when things go bad or turn south and go sour, they get to make money because the government comes in and bails them out. I mean, it's a pretty nice relationship. And you wonder why these banks pay ex-government officials seven-figure salaries, or they send their people to staff government agencies and subsidize their work while they're in the government with whatever it takes to keep their normal compensation up. So my point is that any entity that's deemed too large to fail should be broken up, because they're going to get into trouble, and they're going to count that they know there's a government bailout for them. So anyway, Italy bails out two more banks, and Europe rallies quite a bit. Asia was up 1.76 collectively. Europe was up 2.45, and the E-mini was up about 6 points when I looked at it a couple hours ago. This is an auction week. We have the 2-year today, 5-year tomorrow, 7-year on Wednesday. We settle on Thursday. This usually supports prices. The 2-year auction yields normally a sideways to higher market. The 5-year sideways to lower market, and then the 7-year an up market. And they need that to move the paper. Now, the way they support prices, we've got a couple of videos out that are on the website called Treasury Auctions. Is that last Thursday, the when issued market began trading, the cash market for 2, 5, and 7. Every entity out there that wants 2-year paper has placed their bids with the dealers. So you've got the bid right here, and the dealer will bring the price down to within a couple of ticks of that bid, then take it away. The bid is raised. They bring it down to within a couple of ticks of that bid, then they take it away. And that's the way the auction works and how they encourage people to buy paper. Now, a major piece of news can change things, and we have durable orders today, -0.4, ex-transportation +0.5, core capital goods +0.5. The core capital goods, I don't think has made a forecast this year. It's come in less than that. Durable orders are all over the map because of transportation. Military and aircraft are what swing this number. So the focus is durable orders, ex-transportation, and if it does come in at 0.5%, that's pretty good for the economy, and that would support that the economy is starting to take off and get stronger. We'll see. So the news focus is going to be durable orders, ex-transportation. We have the Chicago Fed National Activity Index plus 0.32. That's positive. And then Dallas Fed at 18. So the news focus is going to be durable orders, ex-transportation, direction of ES, and then the 2-year auction. And you can see, if I come in and take a look at the F2 screen right here, there's only one conclusion you can come to: trading range. And what might take us higher today, what actually might move us up, got to move out of the middle is the 2-year auction. So 24 to 28 is initial resistance. We're going to put our first sell. I think we can go a little higher. 27 to 31, sell 1. 3 to 7, sell 2. On the buy side, I'm hoping for, take it a little bit lower, but when I was doing my homework this morning, we were trading in that 21, 22 area, as you can see, and we've since moved up. We've got to move out of the middle, so we'll make 16 to 20 buy 1, which will be different than what I have published on the email, and 9 to 13 buy 2. Hope everybody's weekend was fabulous. Ours right here, we had some rain. Not a lot, but we were in the low 80s. And on Thursday, I remember coming back from the gym. It was 95 degrees still, 7 o'clock at night, and humidity was 70%. And that's very, very uncomfortable with that kind of temperature and that kind of. It's like living in Houston or Jacksonville, Florida, or Fort Benning, Georgia, places like that. Makes you grateful for air conditioning. Okay, looking at the 30-year, we'll go back and we'll do the X split right here. We're trying to trade higher, so we're in resistance right now. We're right at it. So 20 to 24 is number 1. Sell 27 31s, and then 3s to 7. I don't think the market can run straight up because of the 5 and the 7-year auction, but I do think it's going to test resistance. And so if 24 holds, we can play from the short side of the market. On the buy side, 8 to 12 would be number 1. So 1 to 5 is buy 1. And 25, 29 is buy 2. Yeah, that was a big storm down there. I saw some pictures of the flooding and the rest of it, and tornadoes, etc. And people think they can actually go out and control Mother Nature. We're going to build a Dike dam. They can insure against catastrophic losses to a point, but that's all you can do. I mean, but we and our little egos with capital letters think that we're masters of the universe and Mother Nature is under our control too. And they ignore all these storms that roll through in the summer, the winter, the spring, and the fall. I guess reality would hurt. Okay, gold. 20,000 contracts dumped at the market at 5:15 this morning, and it was blamed on a fat finger. Now, I find that a little hard to believe. This is the 4th event where we've had $1.5 to $4 billion thrown into the market at the market. Prices went from 54 to 30, just below 37. So where might resistance be? We've had support at 45 to 50. That's going to be resistance right now. So 43.45, sell 1. 48 to 50, sell 2. Some large entity out there, and it is almost always a central bank, is trying to keep the price of gold down. No need to buy gold, and they do this periodically to show you that you can't just go out and buy and own gold with impunity. Now, what I think happens when people see this, they come in that want to buy gold, the retail account comes in and buys gold on a day like today because they can get it cheaper, and they're not buying it for trading profits or necessarily wealth creation and the rest of it. They're buying it for insurance for catastrophe. And Middle East, Southeast Asia, you look what's going on in the banking system in the EU, make a pretty strong argument that you need a little gold in your portfolio. $36.38 buy, $30.32. On the sell side, $43.45, 48 to 50. Gold, when it gets smacked like this, it takes at least 2 to 3 days to recover. So we'll see if that's once again the case today. Looking at the euro, dollar was up on that break in gold. Euro came off a little bit. It happened at 5.15 this morning in relationship to the dollar. We like the sell side. We had a 45 to 55 sell. Basically, last week we were at 60, so we had 60 to 75 on over the weekend, and it came in lower than that, so we had a high of 59. We just missed our sell at 60. And here's the spill in gold that came in. So pretty close on our call to be a seller. We see the euro in a trading range. I mean, just visually, that's not too hard to make that call, is it? So got a buyer at 15 to 25. Buyer at the buck, 112 even. On the sell side, 50 to 60. Sell 1. 75 to 85. Sell 2. See if we get it. Okay, Europe. European time, London time, is the best time to trade currencies. That is the market. There's sometimes about 2 days a week there's enough left over for us in the states on the state side clock, but it's a fabulous contract because it trends, and to catch that early trend, that early selling or buying, you really have to be on European time when it's all said and done. Okay, crude oil is up. You know, when you look at what's going on in the Middle East, you can't be too excited about war affecting the price of oil and taking it higher, because what's going on in Syria, the ultimatum given to Qatar or Qatar, the fighting in Yemen, the noise that Iran is making right now, the threats that are coming out of Iran, and the price of oil has been lower. So that reflects that there's more supply than demand right now at the moment. And OPEC can have prices or they can have market share, but they can't have both. The swing producer right now is American shale oil production, and as long as it's profitable to pump and drill, they'll do it. And when it's not, it goes to the sidelines. They don't. It's just inventory hanging over the market. So OPEC's going to have to $50 oil without a huge upturn in the economic activity around the world is probably where we are for a bit. Okay, crude oil. We This area right up here, the 44.50 we've seen, is probably the cleanest break in the market. We've rejected prices over 43.80, and you can see right here that 43.80, so 43.75, 44 is pretty stout resistance right now. We rejected prices below 42.70, so 43.80, 42.70 is about $1. And from a trading range standpoint, we've had a buyer at 42.50 or better, and we've had a seller at 43.75 or better. And that's kind of where we find ourselves today. So the market is headed lower. We're at this high volume number. The other high volume number's down here at 80, so 42.75, 43 by 1, that's very, very aggressive. 42 and a quarter, 42.50 is pretty conservative. So we'd like to get long 42.50 or better. On the sell side, 43.50, 43.75, sell 1. 44, 44 and a quarter, sell 2. So what's the E-mini going to do today? Asia was up, and they were stretching. They said Asia was up because the U.S. market on Friday was generally had pretty good buying in it, although the Dow finished down 7. So everything, we have a little triple distribution, three little distributions higher right here. So everything is pointed to higher prices right now. The last rotate up is at 46. We're already through resistance here at 39 to 40. So that 45 area to 51 is where resistance is right now. We have durable orders minus 0.4, X transportation plus 0.5, core capital goods plus 0.5. I haven't seen core capital goods make it this year. This X transportation is the number that the market will focus on. Chicago Fed National Activity Index up 3.2. No one will see that. Dallas Fed up 18. Won't be. It's well past the news. So the focus is going to be durable orders, X transportation, plus 0.5%. If the recent economic numbers hold true, that number should come in lower than forecast. So we'll see if that's actually the case. First sell is going to be 44.46. Second sell is going to be 49.51. On the buy side, we've got this break at 39, and they do make us pay up. We'll go cheap. We're going to try to get 35 to 38s, but we're going to put a question mark at 40. Early in the session, they always make us pay up to get long, and then 30 to 32 for buy 2. We have not been able to buy for a long time the E-mini on the cheap on the opening. Later in the session you can come in and buy it cheaper, but on the opening the pattern has been open high and trade higher from there. Okay, it's going to take a bit to get everything up and posted. I'm going to get busy on that. I will be back with you as soon as possible.